Hi guys, welcome back to another video. Today we'll be taking a look at Alibaba and how they have been doing recently. So all of you unfamiliar, Alibaba is a tech company that is centered around e-commerce. So as always, the first thing I like to go to is the PE ratio. They currently have a PE ratio of a 21.87, which does indicate that they are fairly valued at the moment. Next, let's look at their dividends. They currently don't offer any, which is perfectly fine. It just seems like they'd rather invest their money back into the company itself instead of paying out its investors. So let's get into their revenue. As you can see, in 2017 it was at about 182 billion, and it's been able to increase it all the way up to 820 billion in 2021. Some crazy growth has been going on inside this company. Let's take a look at their net income now. Basically tells the same story. 50 billion in 2017, all the way up to 171 billion. Nothing is stopping this company. It's going crazy. Next, let's take a look at their shares outstanding. So it has been going up slightly, which is nothing to be concerned about. It is nice to see they haven't been issuing shares too much, but something I definitely would like to see going forward is for them to start buying back shares. This would allow you to own more of the company as the shares outstanding does go down. So let's move into their current assets and their current liabilities. So at the moment, they do have 759 billion in assets, which was an increase of 204 billion in 2017. So this is just a great company. It's a great thing to see. All right, going into their liabilities though, it also has been increasing. But a good thing I can say about this though is, remember this number, 447 billion. So if you go to their cash only, 420 billion. So they could basically almost cover all their liabilities with their cash on hand, which is always a great thing to see. So let's move into their cash flow now. So cash flow, guys, is probably one of the most important things to look at, and I feel like that's the least looked at thing by most young investors. So as you can see, it has grown exponentially. It's currently at 215 billion as it was at 72 billion. So cash flow, for all you unfamiliar, basically measures how well the company generates cash to pay its debts and its ability to fund its operating expenses. And it's basically a good indicator of how well run the company is. Alright, so next I want to compare Alibaba to its main competitor, Amazon. So to start off, Amazon's revenue has been increasing at a smaller percentage than Baba's, and it also makes less overall. So let's move into their current assets now. So Amazon currently has 600 million less in current assets, although they do have less current liabilities, as you can see. Amazon will obviously keep growing, but it's already so big, so it'll be hard to keep going at the rate they have been going at. One big con I do want to mention for Alibaba is it is a Chinese company, and China is a socialistic economy, so it will be a bit harder for them to take over the country as Amazon has taken over America. One big pro it does have going for it though is China's economy is on pace to surpass the United States by current GDP in the early 2030s. With Alibaba ranked as the number 8 biggest company in China, I think this shows so much upside for the company going forward. So in conclusion, guys, Alibaba is a really good company backed by some really strong financials. I believe right now might be a great opportunity to buy as the Chinese markets have recently been crashing. I believe this company will continue to grow and keep being competitive to Amazon. In a sense, Alibaba is the Amazon of China, and let's not forget how much bigger China is. This stock is becoming more and more undervalued by the day. I think a couple years down the line, the price of the stock will catch up to its well-deserved earnings. This might be the best long-term hold out there at the moment. Within the next year alone, I can see the stock getting back up to the $200 range. Finally, I would like to mention that I am not a financial advisor, and you should not base your investment completely off of what I've said throughout this video. I recommend you do your own research before coming to the conclusion of buying or selling. If you'd like to recommend a company for me to take a look at, feel free to comment. Otherwise, I hope you all enjoyed the video and have a nice day.